Okay, good morning. Thank you for coming. I'll tell you a little bit about the reason for this presentation. I'm a translator into Spanish, so you might be wondering why I'm doing this for translators of all languages. I won't be able to tell you how you should translate something because, of course, I don't know. For Spanish translators, I can do it later, after the session. But basically what I'm doing is sharing with you part of a process that I go through when I translate financial stuff. Many times I come across terms, expressions that you won't find easily in dictionaries or glossaries. So basically, one of the steps that I follow is that of paraphrasing and trying to say the same thing in other words as a first step to help me go to the right translation, to the accurate rendering. Maybe sometimes I find a word, sometimes I find more than one word, sometimes I have to redo the sentence because, of course, to convey that meaning, I realize after paraphrasing that I should go another way. So basically, this is what I will be doing today. And I found some words in particular that are interesting because they have many meanings depending on where we use them or what they are modifying. So this is what we're going to start. We're going to start easy with a term that maybe many of you know if you're financial translators, and then we will go through the same term in other sentences. You see that the title is Understanding Financial Jargon, but basically it would be what they mean when they say. When they say this, what are they meaning? Yes, so this is what I will try to share with you today. You don't need to wait until the end to make questions, yes, because I know that at the end we all forget what we wanted to ask. So if you want to interrupt, just raise your hand and I will be happy to stop and discuss it. Okay. This one is easy, I suppose, for many of the ones who are in the economic field. So I started with the Titan because Titan appears in many financial papers or economic papers with different meanings. The first one is this one. Cycles tend to end when policymakers tighten monetary policy due to compressed risk premiums. What is tighten monetary policy? What is to tighten in this context? Yes? You. No, but it's monetary policy, referring to management of interest rates and yeah, raising interest rate, being restrictive. Yes, there are two ways you can, there are basically two main ways for monetary policy. Being restrictive, I mean, getting money out of the market so that interest rates increase, and there's the opposite that would be easing monetary policy, which is injecting money, stimulus, to have more money in circulation so that interest rates go down. So tighten monetary policy in this context would be cycles tend to end when policymakers apply a restrictive monetary policy. This is what we mean. Mind you, for the ones who go into English, that doesn't mean many times you will come across some sentences where you say, I wouldn't say that. Of course, you wouldn't. You would say it the other way. What I'm doing is paraphrasing because it's a step for the one who goes into the other language. Yes, trying to say it in other words, maybe more colloquial. And then this is a part of the process that will lead me to the right translation at the end. Is it clear? Let's see this one, where it gets a little bit more complicated. Nonetheless, an appreciating currency has much of the same effect on inflation as a tightening of interest rates. So there we have the same word, but now rather than using it with monetary policy, that would be the right one, or the most common one, we see tighten, but interest rates. But if we already know what tighten means and what monetary policy means, what do you think that tightening means in this context? Increasing, exactly. It means increasing because that's what you do with a tightening monetary policy. Yes, when you've got a tightening, you're tightening the monetary policy, you're increasing rates. So the rendering, if you're thinking in terms, okay, how can I say it another way, would be an appreciating currency has much of the same effect on inflation as an interest rate hike or as an increase in interest rates. Yes? And we're still using tightening. Then go to we find another expression that might be kind of complicated. The central bank has eased rates 6 times since the beginning of the year. The government has released a string of reform packages and so and so. So what do you think happens here? Again, we are finding a verb that it's not, we don't commonly see it with interest rates. We see it with monetary policy, not with interest rates. But what do you think that ease interest rates means? Exactly, cut. Cutting interest rates, which is what an easing monetary policy does. Cut. The central bank has cut rates 6 times since the beginning of the year. Yes? Again, they are using the word that is most commonly associated to monetary policy, but with one of the instruments of monetary policy. Yes? Well, we come with tight again, but now in another context, not with monetary policy. And we're talking about bonds, about instruments, financial instruments, and says investment grade bonds are tight and downside risks have slightly increased. This is the first. And the other one, which is on the same type of, the same idea, the same meaning, says equity valuations, equity referring to stocks, yes, to shares, equity valuations are on the tight side of fair. Okay, let's see how we can, with the first one, yes? If you're meaning that investment grade bonds are tight, what do you think you mean here? Have you seen this expression? Any of you? Yeah, here it's talking about the valuations, not about the spreads, which comes later in another example. Yes, meaning that investment grade bonds are overvalued, yes, or their value is high. When you talk about instruments, financial instruments, meaning equity or bonds, you can have fair values, which are what they would call reasonable in colloquial terms, meaning that the price is the reasonable price that two parties would agree to pay without other things changing the fundamentals, yes? So this would be fair, would be associated with reasonable, and then when you say that it's tight, you're meaning that they are overvalued, yes? Higher than what a fair value would be. So here, we find one of the expressions where we should change a little bit what we want to say when we paraphrase. What we're saying here is the valuation of investment grade bonds is high, yes? Maybe you can also say bonds are overvalued, but that would depend on the context, because high doesn't mean necessarily, overvalue has a strong meaning. So that would depend on what the text is saying, yes, to have an idea of what you would go with high or just overvalued, which sounds stronger.
Do you mean that they would be saying that the price is restricting the volume of sales?
Yes. So the valuation of investment grade bonds is high. And then we go to the opposite, which is downside risks have slightly increased. So as they are high, you don't have a lot of potential for going higher. And then the risk of a potential decline in value have slightly increased. So the second part would be my paraphrasing of downside risks. Yes. I know that many times, at least for Spanish translators, go with the literal translation. I don't know what happens in the other languages, but sometimes the literal translation of downside risk really doesn't mean anything to the person who's reading. Yes. So that's why I said sometimes we need to go and try to figure out how we would say it in other words, because that helps us go through the right rendering in our language. Yes. For instance, well, I would say many say riesgo a la baja. And what does that mean? What means is it's a risk that there may be a decline in value. Yes, that would be the right one. Yes. Of course. Yeah. It depends. Some of the sometimes yes, sometimes no. It depends on what you're translating for. Yes, sure. Well, as a matter of fact, yes. What language do you go into? Okay. Well, sometimes I have also seen it in English in many Spanish, papers, but not because they are translated. It's because the ones who are writing in Spanish use the term in English. Yes, because they want to go, to be more specific and not to have problems of understanding. Yes. Yeah, but the problem is that sometimes you don't have that in the other language. You don't have the same jargon. It's something that is in English, but you don't have it in the other language. So when you don't have the same expression, then you, of course, this is all a case of judgment, and it depends on how the translator should go about. I mean, I'm sharing just a technique. What I teach my students to do when I give an English translation class. Okay, for some things, just don't rush to the glossary, don't rush to trying to find Investopedia. Try at least first to figure out what it's trying to say, because many times it's just a question of reflecting on the text. Because if you read the whole text, the meaning comes out naturally. It's just don't get nervous on trying to find the word, because sometimes it's not one word, it's just the idea that you should convey. Yes?
I'm a German translator, and I've noticed, and you just mentioned it, this is why I want to go back to that, that the jargon, especially in the financial world, keeps getting more and more English.
Mm-hmm.
So at some point, I just resort to using English term because that seems to be what the financial world is using.
Yes, of course. Everything is a question of balance, and also on the client, of course. There are some clients who would not admit any word in English. Some others, yes. It depends. If you have to use so many words to express something and you don't find something that goes, to the point, I would suggest in some high, complex terms to leave the English. But that depends, on the situation. Yes, who was raising? Yeah, because yes, yes. And on the other one, which says valuations are on the tight side of fair, of course they are meaning valuations fair. We said that it was like reasonable to give another meaning. So are between fair and high. Yes, meaning that they are, if there is a range for fair, okay, they are like bordering or on the top of fair and getting high. So we have to find a way to say it in our language so that we can convey the same idea. Yes? So you mean my examples are not just one word and I leave it in English. I cannot live in English are on the tight side of fair. So you should reflect to say how you would say it first and then go to your language to see what the right expression would be for that meaning. Mm-hmm. Oh, I continue with Titan, but I promise this is the last one. And we move to something else. While spread tightening is not, someone was speaking about spreads. So while spread tightening is not our base case, more defensive positioning is warranted at current rich valuations. Yes? So here it's talking about spreads. Do you know what spreads are? Yes, the differential between the rate that a free risk instrument charges and that an issuer with that is risky would charge. Depending on the risk that that issuer has, there is a spread, there's something, yes, that you charge. That's the differential. Then as the market moves, because of many situations, spreads start to move, and this is what is really changing in the in the market, in the financial market. So the spreads may be at a point, but then when things start to change, I know expectations of higher interest rates or expectations of lower interest rates or different reforms or measures will move the spreads of the bonds that are, or the debt that are is already trading. Yes, so there's an expression meaning that spreads are tightening, which means that they are narrowing. Yes, there's a spread contraction. Yes, that spreads are narrower. That would be tightening in this context. Any doubt? Oh no, there was one tightening more. I forgot. Yeah, in this case, yes, but spread contraction, yes, but it's easier sometimes to understand. Tightening, yes.
Is the spread the same as the difference between what is bid and what is
Yes,
asked?
yes.
So in this case, instead of, if the spread was wide, that would restrict the volume of sale. But if the spread is narrow, it means that the volume of sale is increasing.
Yes, that's right. But we are seeing, yes.
The restriction.
Yeah. Yes, exactly. Well, and then we're going to see another example that has nothing to do with this. So that nothing with increasing, narrowing, or whatever, which is in economics, yes. And here we have tightening with labor markets, which is an expression that appears a lot. And I know that it's hard for many translators. We say tight markets, tight labor markets. What's that? How and when the Fed responds to tightening labor markets will probably be the biggest issue for US financial markets. What it means to respond to that means the Federal Reserve makes decisions on whether to raise or lower interest rates or to not to change any rate depending on the information, economic indicators that are released. So they have had information on labor markets and they are wondering what the Fed's response will be. The information was tightening labor markets, which is this: how and when the Fed responds to labor markets that are near full employment. Yes, when the labor market is tight means that that economy is near full employment. And why this is associated with tightness? Because there's more demand for jobs than supply, yes, or offer. And there is, no, oh, yes, I'm sorry, yes, there's more of, no, there's more demand. The companies are looking for, no, but I've seen it from the point of view of the companies, and I tell you why. There's more demand because companies want to hire, and then they have to increase wages to try to get employees because there are not enough. So I was seeing it from the other point of view. So that's why they associated with the idea of tightness.
Well, isn't it the same as the spread? That the volume of people looking for work is approaching the number of jobs that are available.
Exactly. It's near here, yes. Exactly. That's right. And then the idea is that they are nearing, tightening. I said nearing because they don't say they are tight. It says they're tightening, meaning that they are on that way. They are not in full employment yet, but they are near. Yes, that's why the process of tightening, yes? Otherwise, it would have said response to tight labor markets. Yes, that means as something that it's complete.
Tightening is more of a process that could be vital than nearing full employment. So nearing I see as much closer to full employment than tightening. Tightening could be from 40% to
no, but it's, I would say, if you're saying if they're going to respond, well, again, this has to do with the context, because as a matter of fact, in the United States, you are near full employment, according to the information, according to the releases. Yes, and that's why they're thinking of raising more interest rates. So it depends on what you're reading, basically. Of course, that if you're seeing that they are in 8% and from 8% they went to 7 of unemployment, it's one thing. But if you're in 4.5, you're almost there because you have a definition of what you feel it's full employment, which is not zero, by the way. It's a low percentage. Okay, we have changed now. Yes, no more tightening. Um, but we continue with monetary policy for a while. Then we're moving to something else. And here it says corporate fundamentals are solid, and the accommodative stance of the ECB is a continuous tailwind as it encourages investors to search for yield. What do we mean when we say accommodative? Yeah, it's a little bit more than that, in my opinion. It's a little bit more than easing interest rates because it also has quantitative measures, which is not only increasing rates, it's expanding the monetary base. So I would say that it's expansionary monetary policy, which is a combination of increasing interest rates and injecting money in the market directly through stimulus. Oh, who's going to speak? Someone raise your hand.
This is extremely helpful. I'm just wondering, are you going to share with us the resources that you use to do your research to find out the paraphrase?
I will tell you something. Last week, I was translating something that was like, I don't know, 20 pages long. And there was one word that was killing me. To solve that word, I read 3 European Union papers because I didn't know how to go about it. I mean, what it was. And I was telling you the other day, it was crazy. I said, oh my God, how much I'm going to read to get to that, because I was reading one thing and then it's not one resource, really is a lot. It's a lot that you're supposed to read, and it's sometimes you can find something easily, sometimes not. What I'm encouraging with my presentation is critical thinking. I mean, don't go, it's not a question of how many glossaries and things I go, or it's how much I reflect and try to find, but not on a bilingual idea, not on a bilingual base. Going to textbooks and trying to read, that's the only way that you can get the meaning of what you're trying to say. And of course, having friends who speak English. Mm-hmm. Yes.
In the Portuguese case, the ECB translates it quite literally.
Yes, and that's a big thing.
Translated as orientação acomodatícia.
Yes, of course. And in Spanish, the same issue happens. I mean, there's a kind of, sometimes I am forced to do acomodaticia, and I don't like it because I think that doesn't say, but it depends. Of course, if you're writing for high level people, of course you can do it because they will know. But if you're writing an article that's going to be published for layman, really that doesn't mean anything. And then you will have to see how you manage to convey it so everything depends on. I always say that translation is who, when, why, where. First you have to answer these questions, then you can get started to translating now. So everything here is like isolating, and maybe every one of you has a different issue or a different example with a different context, because there are different why, where, who. Yes. Tailwind is anything that is complicating a situation, that is a kind of something that. Headwind. Oh, I'm sorry. Yes, it's right. It's right. Headwind is the opposite. It's trying to. Yes, yes. Tailwind is when you go. Yes, I'm sorry. It was the opposite. Okay. The Fed indicated earlier that it wanted to raise its policy rate 3 times next year. What do you mean by policy rate? the monetary policy rate. Now, for many of us in our countries, saying the policy rate literally doesn't make any sense because there's not anything such policy rate in many languages. I don't know, I cannot say everyone, but I see Portuguese, French, Italian, sometimes with my colleagues. So as a matter of fact, what you're saying is to raise the base, the reference, the benchmark rate, which is the rate that they're using to move for the transmission mechanism. Yes, they are transmitting monetary policy through interest rates. And that is called the base, the benchmark. Many times you can even be even more specific, because if you're talking about the Federal Reserve, you know that the policy rate is the Fed funds rate. So you can just go and say the Fed funds rate in your language. If you're, of course, this means that you need to be very sure what you're saying, because it's not saying it here, but you know what the policy rate is for different countries. Yes, in Argentina, I would know what the policy rate is. I know which is the rate that they move to have an effect on the market. Okay. Now we go with Hawkish and dovish. Yes, I suppose that appears a lot also. I know, have you seen this expression? Have you suffered this expression into your own languages? Yeah, it's terrible. Because it doesn't end here. These are just two examples, but they appear everywhere with different meanings and where it's not so easy to go. Okay. Let's see, that it was currency markets featured a sharp rise in the euro, which climbed 2.4% against the USD, following hawkish comments from the European Central Bank president. And the other one, which is the opposite, says, markets welcome the Federal Reserve's dovish tone. Okay. Basically, being hawkish, yes, means having a restrictive policy or view of the monetary policy. I'm giving you here just a brief description. I'm sometimes more, bold in the way I translate it, because depending on the context, you may go even further. For instance, here it says, currency markets featured a sharp rise in the euro, which climbed 2.4% against the USD, following restrictive, aggressive monetary policy statements by the ECB president. Of course, this is very neutral. I'm trying to paraphrase without any further idea, but it depends on the context. You may even mean that their statements are, depending on what you're writing, and it has happened to me, that I just said that they are inclined to think of a interest rate raising interest rates in the future, because it depends on what you're writing, And the idea of hawkish comments and dovish comments is a term that in English means a lot in itself, but in other languages doesn't. So you will not be able to just give one word translation to that, because it won't make sense. It's the whole idea behind or underneath the word hawkish or dovish. Of course.
The dovish, can it be considered as conservative or no?
No, basically in monetary policy terms, the dovish are moderate. They don't want, but again, it depends on the context. Of course, everything will be related to easing monetary policy as opposed to the other one, which is restricting. But I would like to go over this second part, where it says, markets welcome the Federal Reserve's dovish tone. And here, I gave this rendering to make it easier for all of us to go through the meaning, but as a matter of fact, my translation was different. Markets welcome the Federal Reserve's statement of a monetary easing nature. Like they were, just for you to understand. That's not the way I would translate it, but it's just to understand what dovish means. Means that but dovish may be that they have a tight monetary policy and they're thinking of starting to easing it, or maybe what happens here, that is, you already have a very relaxed monetary policy, and what a dovish tone means that you're not thinking of tightening very soon, and that you're thinking of doing things gradually, and that's considered dovish. as opposed to hawkish. Do you follow me? So how you will translate it will depend also on the context that you're translating, because here, in the case of the Federal Reserve today, you have it, and you're tightening very gradually, and then a dovish comment will be, we will be very gradual. Don't expect a lot of hikes, because you're already starting a hiking cycle. So everything depends on the context you're translating.
It could be too, because these are such subjective terms.
Of course.
Like 20, 40 years in the future, what's hawkish and dovish could be switched.
Of course, yeah. No, I don't know. I don't know if I will be able to tell that, but I hope so. But what I mean is, be careful in these particular two terms. They're so subjective, because depends on the context in that very moment. That the way that you will render it, this is just an approximation, but this is taken out of a context, yes, and then that will depend. For instance, in the case of the ECB, they have not started to tighten yet. So a hawkish statement is like, oh, we're thinking of tapering all the money that we have injected into Europe. This is considered hawkish, which doesn't mean that they are going to apply, a tightening monetary policy. So be careful when you are translating that into your own languages. So you mean why the glossary doesn't answer those things? That's only critical thinking. Okay, let's go to the markets now. The market is currently pricing in roughly a 50-50 chance for a third interest rate increase before year end. What is pricing in? Exactly. It means, basically, in colloquial terms, would be market prices currently reflect that, meaning that they are assuming. You could say reflect, assume, means that in their pricing, they are taking this as the base case, or as the most probable scenario. I know that this one also gives some translators into other languages kind of a problem, but again, in this case, you need to change, perhaps add some things. Yes. No, of course, you won't translate. I'm doing a paraphrasing to understand. That's not the way I would.
That might be
yes.
to go for a literal translation of assuming. And assuming is based on assumptions. And assumptions are technical indicators, or could be technical indicators.
Yes.
In this case, it's only a reflection. It's something more lighter.
But that's very, I don't agree, because I think that what analysts do, the consensus, usually are reading leading indicators that are telling you what may be happening in 6 months. So they are assuming. They are assuming based on leading indicators and not coincident indicators that tell you what is going on right now. But, these are, what I would say anyway, the term that I use in Spanish, for instance, has nothing to do with reflect or assume, because we have another term. But to go to that term, I first needed to understand what they meant. And then I could find that term in financial magazines or newspapers.
Do you try to, with pricing in, do you try to communicate that prices are in a process of changing? Or
no, that the prices are showing certain assumptions.
When you read pricing, is pricing in, you say it's already priced in.
Yes. Yes, exactly. That's a technical term, factoring in. I didn't use that one because maybe some people wouldn't get comfortable with that term, which was also, but yes, factoring it. Okay, let's go to another. We're still dealing with subpar growth. So today we would temper the renewed optimism that US growth can do better. What is subpar growth? Underperforming what? The target or yeah, the expectations, or many times also it's the average that you have had, your trend growth. You have a trend growth, which is what you were doing or how you were doing, and subpar means that you don't keep up with that trend that you were having, yes? Not necessarily. It's not the projection, it's the trend that it was having. I mean, you were having a certain trend. This is in economics. You were having a certain trend, and then you were expecting, according to the trend, that the long-term trend that you were having, I mean, or the country was having, to have a certain amount. Of course, your projection is based on that, because you're following the trend growth. Have you heard trend growth? Which is the trend that you were having or you have been recording for a long time. And the other one related to growth is we are adding emerging market equity exposure, focusing on markets with secular growth. What is secular growth? Because it's interesting. I have found this translated in Spanish literal, and it has a different meaning. So that's why I included it, because...
Is that private sector?
Hmm?
Is it private sector?
No. No, secular growth as opposed to cyclical growth. You may have cyclical growth that has to do with the things that are going on right now or certain policies, but secular growth is structural growth, long-term growth that is not based on the cycle or seasonal aspects. So would be more of a long-term projection rather than a short-term, yes? So that's why I included it, because in Spanish, for instance, it has a different meaning. And I still keep saying crecimiento secular. And we're not saying what it's saying here, yes? We are still dealing with growth that is below average or below expectations. The average here is below the average because to make a trend growth line, you need to take the average of the expectations, yes? So below average or below expectations. So today we would temper, but I have seen subpar growth as weak growth. And that's wrong. Because subpar doesn't mean that it's weak. It means that it's not what you were, where you raised, yes, exactly, what the trend was saying, or where, of course, if you want to call it the target, yes, because the target is based on that trend, yes, but it's not a synonym, of course, yes, it's not directly synonym of weak. This is what I mean. And the other, then, we would say we are adding emerging market equity exposure, focusing on markets with structural long-term growth. Yes, when we're looking for companies or countries or sectors with secular growth, we're speaking about sectors where growth is not cyclical, yes, where they have strong fundamentals, long-term, structural, and then you can expect them to keep on growing in the long term. Okay, now we continue with the financial markets, but we move to the famous curve. Have you heard the curve? The curve, yes. What's the curve when they're talking about bonds and debt? What is the curve? Why do they talk about the curve? They talk about the curve because it's shown on a graph where you have the term from short-term, medium-term, long-term debt or bonds, and then you have the yields, and then you start seeing how much is being paid for by the different bonds or debt or by the different securities, depending on their expiration. Yes, the term, whether they are short-term, long-term. So they call it the curve. Yes, and then they move throughout the different parts of the curve to express something. For instance, here's the say, as expected, deceleration in China will likely moderate Japanese growth, applying downward pressure on the long end of Japan's curve. So what do we mean with the long end of Japan's curve? What is the long end of the curve? Exactly, it's long-term debt, yes, because the long part of the curve is the end, yes, where it's long-term. So what they're meaning here is, as expected, deceleration in China will likely moderate Japanese growth, applying downward pressure on Japan's long-term debt yields. Because when you talk about the curve, you're talking about the yields that those debt securities or that debt will yield, will offer the investor, yes? Again, many times you will talk about la curva. I mean, you may translate it directly and use curva or curve directly because the experts know it. Again, it depends on what, why, when, where, yes? And it's important for you to know what it means because first you will need to know and then you decide if you're going to keep the same method or not, depending on the context where you're translating. We'll have a little bit more of the curve. The Fed controls and dictates the short end of the yield curve. And the other one says the chart clearly shows the yield curve was steepening as the short end moved lower. What it means, steepening? Okay, that's why, because no, but the steepening means no, otherwise would be an inverted curve. Yes, because this is only positive. Yes, if it's the other way around, it's not called steepening. It's called inverted curve. Yes, which is negative. So the Fed controls and dictates short-term debt yields. Yes, it's talking about the short-term debt or short-term securities, the yields that they offer. And the other one, again, this is not the way that you should, that someone would translate it into English, and I tell it again, because it's just an exercise we are doing to try to understand what it means. The chart clearly shows the gap between short and long-term yields is increasing, yes? As short-term yields are falling. Yes, when we say that the short end moved lower, what you're meaning is the short-term yields are falling, are declining. Do you want me to leave it here? Anyway, there's my email at the end. You can write it, and if you want, I can send it to you. Let's go to the next one. It says, large output gaps in Europe, Japan, and China, coupled with lackluster productivity growth, will continue to cap upside on US yields. What is the upside? What is the meaning of upside? The potential for prices to go up. Exactly. Upside implies the potential for prices to go up, or yields, or whatever you're talking about that has upside. And then it says, after those torrid gains, it's not hard to worry that overall upside in US markets might be near an end. Yes, so again, we have the idea of upside as potential increase. So here it says, large output gaps in Europe, Japan, and China, coupled with lackluster productivity growth, will continue to limit the potential for higher US yields. Yes, meaning that they won't allow them to go much further higher. And the other, after those torrid gains, it's not hard to worry that the overall potential for revaluation of US markets might be near an end. Revaluation meaning going up in value. Yes, again, this is a restrictive term, yes, but it's meaning the same. Potential for higher prices for more value. Always the idea of upside is implying potential. Yes, something potential, not strictly happening, but that has the potential to happen. How are we with the time? Because I want to cover all. Okay. Okay. Okay, we continue with the financial markets. And maybe you have come across these expressions, the ones who do financial market, not economics, but financial markets. Says, overall, we believe market conditions justify a risk-on stance. What do you do? Have you come across this expression, a risk-on? Exactly, moving to risk assets. Yes, what they're called risk assets in general. Maybe stocks, maybe bond, depending on the context. Risk assets, maybe commodities. And then it says, with the risk-on, risk-off environment persisting, we maintain our preference for trading-oriented strategies, which can capitalize on directional market moves. So what would be here this risk-on, risk-off environment? It's not going up and down. It's a change in the attitude of investors who are moving from, okay, let's go to risk asset. No, let's go out. Let's go in, let's go out. So that creates volatility. The volatility is like the effect of investors, swinging between one thing and the other. Yes, you were going to say something? Yeah, no, it's like it's changing in the attitude of investors because, yes. Overall, we believe market conditions justify, the first one, risk-on stance, taking exposure to risk assets, yes? Because we talk about getting exposure means buying, investing, yes? The other one would be with markets still swinging between risk aversion and risk appetite, because really risk-on is what we call risk appetite, an appetite for risk assets, meaning we want to invest. And risk aversion would be the opposite. So when you say risk-on, risk-off, where at least in Spanish we don't have an expression that is so short and so nice to express such a whole thing, the idea would be that investors are swinging between one thing and the other, and there's not a definite trend, so that is what is creating fluctuations. And that's why they are proposing a certain strategy for investors. Appetite, risk appetite. With commodity prices at current levels and concrete signs that domestic demand is improving, downside risk to credit profiles in the medium term are limited. So here they're talking about credit profiles, meaning the ratings, yes, the credit worthiness of corporations, yes, talking about corporate bonds. So what would be downside risks in this context? Exactly. The downside risk, I suppose that you have come across. I could have done a workshop on downside risk only. Because the downside risk appears everywhere for everything, and it's really difficult. I chose this one because I want to put a little bit of everything, but I may write a chapter of a book about that. Downside risks to credit profiles exactly means that there is risk of deteriorating credit profiles. Credit profiles meaning credit worthiness, yes, the credit worthiness of corporations that are issuing bonds. What I mean is why it's so necessary, this paraphrasing, because if we still continue going through the literal translation, we come across translations that say nothing to the person who is on the other side, yes? Then I chose this one that I thought it was interesting, the term proxy, in two different contexts with two different meanings. That also appears, I don't think a lot, but appears in financial papers. It's true that the number of active firms is a proxy for optimal utilization of growth opportunities. This is one. And the other says, this is notable because stabilization should be enough to alter sectoral leadership in US equity markets away from bond proxies towards sectors that benefit from secular earnings growth. So here we have proxy with two different meanings. What would be the first meaning? The reflection, you said? An indicator, a measure of something that it's indicating how something else is. Yes. In Spanish, we use a lot the term, I say it in English, barometer, something that is measuring. Yes. We use that, for instance, we use that type of metaphor. Yes. And what about the other, when you say bond proxies? Are we talking about indicators or measures? Exactly. Exactly. We will go now to that. Surrogates. Something like that, she said. Okay, that's the idea. And I will go to that now. Says, it is true that the number of active firms is an indicator or a measure of optimal utilization of opportunities. This is the one that is most common to us. Yes, it's the one that we come across very often. Now, the other is speaking about shares, definitely. And when it talks about bond proxies, it's referring to a portfolio where you have shares, bonds, and perhaps alternative assets, I don't know, commodities. The point is sometimes you want to have that portfolio divided in shares, bonds, but you don't have bonds to invest in at that point because there's nothing, because the market is down, because you're not interested in the bonds that they are offering now. So what you look for is for bond proxies. Bond proxies are shares that, in a way, move in the same way as bonds because of the sectors they are in. Yes, as opposed to others that benefit from secular earnings. So those bond proxy shares would be, for instance, utilities. Yes, that's a typical sector that moves or that correlates better. That would be the technical concept. Correlates with bonds, the bonds market. So in the first one would be an indicator, a measure, and in the other one is shares with bond features. Yes. Shares that have bond features in the sense that they will give the same thing to the investor. Then you will have to see how you would say it in your own languages. Yes, this is just an approximation of what they mean, and then we should come across that term in our own language or that expression. Yes, but basically they are completely different concepts. Oh, what did I do? Well, continuing with financial markets, it says, we maintain a neutral rating on Japanese stocks. Given the index's heavy weighting towards cyclical sectors, the rise in global risk aversion is a headwind, another headwind. That's, I knew I had it. Neutral rating here, what does it mean? Exactly, and this is interesting because usually many financial translators associate rating with rating agencies, yes? With rating, with a measure of creditworthiness, or else a measure of being overweight or underweight. And here, it's different when it's referring to stocks. Rating comes to recommending. What they are doing is recommending what to do. I mean, they are giving you a recommendation on what to do. Buy, sell, hold. So a neutral rating is a hold recommendation. It's a recommendation to hold. And it's called neutral recommendation. So it's interesting because if you translate rating in, for instance, in my case in Spanish, as I translate rating for other aspects of financial markets, I would be saying nonsense because there's not such a rating. There's not a rating agency doing that, yes? The other one is talking about the index and how the index is made up of. Heavy weighting towards cyclical sectors is talking about the share of cyclical sector companies that are in the index. Yes, everything that is cyclical are some certain sectors and exporters. Yes, so When you're talking about heavy weighting, you're talking about the proportion of that sector in the index that you are reading or that you are taking as a benchmark, yes? Are we okay? Well, I will try to rush. The Japanese market has at times traded under book value. We remain bullish in the yen against the dollar. This is a typical case where, I don't know if that happens to many financial translators, at least in Spanish it comes that we say bullish and we just want to use the term for bullish. But we cannot use it everywhere, yes? So, and it doesn't make sense. Here is a typical case of where we need to paraphrase, yes? We need to say, we continue to believe the yen will appreciate against the dollar. That's being bullish, you know, meaning that it will be appreciated, will be stronger against the other currency. So that's why you keep on investing on a certain pair, yes? Maybe yen dollar. And the other one said, it remains our view that high-grade corporates continue to offer value, better value, particularly as spreads to sovereigns remain at attractive levels. And here I include this one because I think it's interesting how we turn adjectives into nouns and this in English. And what are high-grade corporates and what are sovereigns? Exactly. It's referring to, well, high-grade corporates, I would say corporate security. I mean, because sometimes you have notes, bonds. It's like, this one is like a general term, you know. The same happens with treasuries. When you say treasuries, if you go to translate it into other language, be careful. Don't say treasury bonds because you're leaving out treasury notes and treasury bills. So when you get treasuries, unless you know what you're talking about, because perhaps in the context it's clear they are bonds, but otherwise just use securities, if you have the term in your own language. And then it talks about spreads to sovereigns. We said sovereigns is sovereign debt. What is spread to sovereigns? Exactly. The interest rate differential, that again, between the risk-free rate that I know a government bond, US bond may offer, and a riskier issuer. Exactly. So that would be, it remains our view that high quality corporate debt or securities continue to offer better value, particularly as interest rates differentials with respect to sovereign debt remain at attractive levels. That would be the paraphrasing, yes? I will skip something if I can come. I want to go to this one because it's this is, you know, I have, you know, I wanted to commit suicide sometimes with this and I chose these ones. They are worst. I couldn't find the others, but because that's definitely something that we cannot say. At least in Spanish, it's impossible. I don't know in Italian and French, but in it. We expect mid-single-digit percentage returns in the corporate bond market sector. Or we expect mid-teens earnings growth, and it's not referring to teenagers, yes? Okay, so first you have to figure out, and at the beginning when I started translating, it was like terrible because I was trying to go through, trying to figure out what they were meaning. And then how you say it. This is my opinion. We have different options. Each language may have the different ways to say it, yes, but at least what I mean with mid-single-digit percentage returns, digit, okay, one digit, mid, so I said in the region of 5%. I mean, plus, minus 1%. Basically, this is what they mean. Definitely, we don't have, sometimes they come across some translations that say, for instance, un dígito medio. for instance, in Spanish. And to the one who's reading that, it's like nothing. I mean, we really need to say something that it's more than that. And the other one, we expect mid-teens earnings growth, means we expect midway. I mean, earnings growth, I forgot it, I'm sorry. We expect earnings growth midway between 10 and 19, because that's what they mean, you know, it's like 14, 15, 16, around there. You don't agree? Yes, that's of course. I'm saying what I try to understand. I mean, this is the process I follow to try to understand what they mean, and then you can say in the region of 15. Yes, definitely. Do you translate into Spanish or into English, or into English? Yeah. I know, but sometimes it's really very hard in our language because we don't have this type of expressions. So, of course, this is something that you always speak with I mean, I don't go like this without asking the client first. Yes, if you have the option. I mean, in my case, many times I do have the option, and I ask them, okay, what will I do? Will I say something like hovering around, you know, in the region? Yes. No, I think that the teens goes between 11 and 19. 13? Oh, okay. So, okay, that was my, you see, it's a, yes, you were going to say something. It's over? Okay, okay. Just one recommendation. There is also the possibility of, I will concentrate only on this summer, which is really important. And I insist on this all the time. There is also the possibility of central banks competing to outdave each other this summer. This summer, for people who are in the Northern Hemisphere is one thing. For us, it's another thing. So please use quarters. Really, because it's terrible for the ones that are in the south when you say este verano, okay, this summer. What summer? My summer, your summer, which one? You know, so this is something that a client of mine told me and says, you know, this is and I realized, yes, it's true. We're just, how do we know where there's, otherwise, okay, I tell you, one thing is to say this summer would be the third quarter, yes, in the Northern Hemisphere, because we know that they're there. The other is to say, for instance, no, month, no. Because, well, you have to say 3 months, because the summer is 3 months. But you could say, for instance, in Spanish, we say also verano boreal, meaning that we're talking about the summer in the Northern Hemisphere, but we add it, because otherwise it's really confusing for the person. And if you're talking about projections or expectations of what is going to happen with a certain stock, you know, you're just saying something different. It's different months. But you're there, and yes, it's true. Okay, well, that's all about Audove. I owe it to you for the future.